Hello, everyone, and welcome to completing a basic tax return with depreciation in CrossLink 1040 desktop. Today, I just want to cover just a little bit before we leap into the program on the return preparation method that we use here at CrossLink. It's important to understand that the way you enter information in the program has a huge impact on how everything is calculated and how much work you have to do at the end of the day. To begin with, what we do is complete the client data worksheet. This is all their personal information, address, phone number, name, social security numbers. All of this is then pulled into the rest of the forms within that tax return. So you don't end up typing their name and phone numbers over and over and over again. So start out with their personal information on the client data worksheet, and then you can move into adding their sources of income, W-2s, 1099s, W-2Gs, any of those make sense to add right after their personal information has been entered. That way we get some numbers to start to work with in the tax return. Once we get their income entered, we can add some schedules and any of those secondary forms for credits or any of those things that they have. Those schedules then can lead into the depreciation of assets. And that's where we're going to focus our webcast today, is right here in this depreciation spot. To continue, once you've finished entering your schedules and any assets, you'll want to move into adding your state returns. Those states will then largely fill themselves out. If you have any special city circumstances, you might do some extra additional work. But if you stick to this methodology, by the time you get to the state, there's very little work left to do, except to verify that all the work is entered correctly, to print the return, sign it, and get it sent off to the IRS and to the customer. So stick to this methodology and you'll race through tax returns during the season. Let's take a look at the program real quick here. We come into my work in progress summary, and I'll just open up one of my tax returns here. Now, I have started out already and entered some of those first few things. So I've entered all their personal information on the client data worksheet. You can see all that here. And then I've also added W-2 information. We're not going to do any states or anything. We're just going to keep it real simple. So this is a very simple tax return. And I want to point out a couple of snags, a couple of places where people tend to have a little worry when they start filling these out, especially if they're new to the program. The first being, remember, before we can depreciate any assets, we have to add those schedules first. So if we look in here, I don't have any schedules entered. You can see that over in my attached forms. And all I have listed in my depreciation is vehicle. So we have to add the forms before we can see anything in here. And that's because there are basically two types of assets. There's a vehicle asset and there's a standard asset. A standard asset is one that can be written off just to a single schedule. And that's why we need to know the schedule to get in there. A vehicle asset, however, and we'll see this a little bit later, can be written off to multiple schedules at the same time. Okay, so we need to add the form first. And let's add a Schedule C. We'll give it a name. Just really easy. Now, here's a little trick I show people when I'm at this spot, because I'm right here anyway. So when we're dealing with these business codes, if you look, we have choices connected to that. That means we have a list of these business codes that are available to kind of help you enter and get them on the form. But we are stuck with dealing with just a list of numbers here. There is a trick. If you ignore this first field for the second description field, you can type in the first few letters of the business name and the code will dance in there for you. So that'll makes it a little bit easier to deal with these business codes. So that's an aside. Right now we have our landscaping Schedule C entered. And you can see as I move through the tax return, we get a name over here on the side. And if I look in my depreciation over here in attached forms, we now have our Schedule C. So number one, make sure you enter that form first, and then we can get in here and get to our depreciation. Now, since we're here, I want to enter a Schedule E because we are going to mess around with splitting a vehicle between the two of them. Okay, and depreciation. There's my Schedule E. Excellent. And you can see how they're named as well. So if you have multiple Schedule Cs, multiple schedules, you can tell them apart by the name. Let's go into our landscaping Schedule C. We'll double click. I'll add a new asset. We have the description of the asset up at the top here. And we'll say a computer. We bought a new computer for our business. We have date placed in service. I'm going to leave this alone. And then we have all the codes that the IRS gives us to enter for these assets. If we look here, I believe it's a code 2. And click OK. And our computer, code 2. All that's left for us is to enter how much this computer cost us. We built one for $1,200. Notice the state is entered automatically. All you have to do is type in the federal side, and those states start to flow over. Just to point out before we get out of here, Section 179, if you're looking for it, it's right here. There's all kinds of tools at the bottom, bonus depreciation, sale, casualty, out of service. If those things apply, those buttons, those tools are down at the bottom. But at this point, we're done. We can click close. Here's our bonus depreciation. I'm just going to click OK. And there's our asset for our Schedule C. Return to list will bring us back to our list of forms for depreciation. And then if I go to my Schedule C and scroll down, there's my depreciation. Pretty easy. Let's look at that one more time. So I'll go into my depreciation. Let's do another one for Schedule C so we can see there's my computer that's already here. We'll have a new asset. Let's do a desk this time. That's probably furniture and fixtures, wouldn't you say? Click OK. We're left with our how much the desk cost. Let's say $500. It was a nice desk. And that's it. Close. Bonus depreciation, whichever way you want to go. OK. There's now our desk and our computer. Return to list. Close. And you can see our depreciation added up here on the form. Now let's look at a vehicle asset. If you remember, we talked about how a vehicle can be split between multiple schedules. If we come in here and we open up our vehicle, we'll click New Asset. And notice right off the bat here, we only have to deal with the codes that are associated with a vehicle. So we're not wading through all the desks and computers and all the other codes that we have to deal with there. We'll enter what this vehicle is, Ford F-150, light duty. Click OK. Now, there's a couple of things that will trip us up while we're in here. First off, if we're just entering a normal asset, we're beginning to ask questions about a vehicle and, all this stuff already looks really strange if we're entering for a desk or a computer. And we might just want to get out of here. So we'll click close at the bottom, just more or less out of reaction, and we'll get this error message that keeps popping up here. That makes us feel like we're trapped in this window. But what's happening is it's asking us, okay, hey, if you want, we got to enter cost basis right here. Or if this isn't a good asset, we need to delete it rather than close it. So enter our cost or delete the asset, and that'll let us out. We can delete it down here. So we'll enter cost. How much is our Ford these days? 25. Our state goes in there automatically. 179 is still here. And we have these questions down below. Another thing that happens is we'll get excited about entering mileage and expenses. We'll have the cost entered, and rather than answering these questions, we'll click on this tab, and we get another error message. All this is telling us is we need to answer all the vehicle questions before we can continue to that tab, or we can delete the asset. And the reason is, if you look at these questions here, these have a huge bearing on how this asset is going to be depreciated, how those numbers get calculated. So let's take a look at these one at a time. Was the vehicle available for personal use? Yeah. Was the vehicle used by more than a 5% owner? Sure. Is another vehicle available for personal use? Yeah. Do you own this vehicle? Yeah. Now, these very well can happen. And some of these answers may be no in your case, but you could get somebody who is using a car, their spouse has the second car, but they still will pick up the children from daycare or run for groceries on the way home. So lots of scenarios when it comes to this. And then we get to these two options here that begin with force. Force actual expenses and force standard mileage rate. So if you say yes to this right here, what you're doing is you're enforcing just the actual expenses part of the depreciation of this vehicle. If you say yes, if you say no here and yes to standard mileage rate, you're enforcing that standard mileage rate and ignoring actual expenses. In some cases, you may be doing this for a cab driver or somebody who does Uber and things of that nature may fall under this. And those guys already get paid for mileage. If there's somebody that's not a cab driver or a chauffeur of that nature, the best idea here is to say no to both of these. Don't force either one of these. Let the program figure out which way is the best way. If you say no to both of these, you'll be allowed to enter both actual expenses and standard mileage rate, and the program will figure out which method gets the taxpayer the most refund. This is a little trick that some of our new guys might not know yet. And then lastly, we have acres and makers question at the bottom. Notice I am not able to click on this. That's only because of my date placed in service. I'm doing it in the same tax year, so there is no previous year here. If I change this number to 2017, for example, now this bottom question will engage. And we get that question quite a bit, so thought I'd point it out. All right, so now we have our cost entered. We've answered our questions. We're going to enter both actual expenses and standard mileage rate and let the program help us out. Can we click on mileage and expenses? Yes. All right, and notice we have right here our schedule names, landscaping for our Schedule C, our address for our Schedule E. At the top, we can enter how many miles we drove the vehicle. So let's just keep it really simple and say 10,000. We have our commuting miles as well. Average daily commute, if you want to add that, you can. And then you can split the miles right here. So we'll go 5,000 on one. We'll just split it right in half. And after we enter the miles, remember, we're not enforcing the standard mileage or actual expenses. We're going to enter both of them and let the program figure out which way it went. So oil and gas and repairs, we'll say $250. Why not? Tolls are getting super expensive these days. We'll double that. Vehicle rentals, all those kinds of things apply at the bottom. And then these last two check marks are basically due diligence. So do you have evidence, especially if it's a taxi cab driver or a truck driver, they'll have logs that they use that you can use as written evidence. All of those things, by the way, can be scanned in the document archive. So you'll have them for later if you need them. So we'll mark both of these. And then we have our depreciation tab over here. We can take a look at how this depreciated. Oh, what's happening here? We got an error message. Total mileage amount entered is less than business miles plus commuting miles. If you don't want this, make sure you delete it. So this is kind of cryptic. Total miles entered less business miles plus commuting miles. What's going on is commuting. We don't get paid for commuting. So I have to subtract it from this 10,000. What I did here was I added them together. I just split it in half. So what I need to do is change this. So landscaping, we still did 5,000 miles, but our rental, we only did 500 miles. Okay. Now, does this have to equal the 8,000 miles that this would turn into? Not necessarily. We are using the vehicle to pick up our children and, those kinds of things will take away from those miles that we can add here. Now, can we look at depreciation? All right. And you can take a look at how the numbers fell basically here. All right, and that's a vehicle. So we'll click close. There's our F-150, return to list, close, and here's our 580 expenses. Where are we on our Schedule C? And if we look at our Schedule E, you'll notice we have our auto expenses there as well. Pretty handy. So let's look at that without all those error messages. Let's kind of look at the nice and smooth way of entering a vehicle. We'll go to our depreciation over here in attached forms. Open up our car and truck. New asset. This time let's do a Civic. Gas-powered automobile. We'll enter how much our Civic was. We'll answer our questions, remembering that we want to maybe enter both actual expenses and standard miles. We'll move over to our mileage and expenses tab. I'm just going to use simple numbers again. And then we can divide those numbers as we see between these two schedules. We'll enter some numbers for our parking tolls, and we have some written evidence. They kept a log, let's say. All right, that's it. Close. There's our Civic. Return to list. And now you can see our auto expenses have increased on our Schedule E. and our Schedule C. All right. One last thing here. When you look at your Schedule C and you scroll down to Part 4, you'll see what looks like a little guy that's maybe lost his hat. Right? So here, this section is where you can enter your vehicle information without putting it in that depreciation manager. There are a couple of things that I want to point out about this method, though. The first being we need to place a check mark in this box here in order for our information to flow to line 9. Otherwise, it's not going to work. So make sure you check mark this, and you can fill this information out, and this will flow just normally. Also, this will not be reported in next year's return. So if you prepare this person's return next year, this information doesn't necessarily pull forward like it does if you entered it in our depreciation manager. So if you are tax planning for customers, if you want to keep track of that stuff over the course of the years, make sure you enter it in the manner that I've shown you, rather than entering it directly on the form. And that's it. What's left now is to verify, to print, and get that return signed and transmit it off to the IRS. So make sure, let's go back to that just real quick. Make sure that you're sticking to this methodology. Now, we started with the client data and the income already entered, but in order to get depreciation of assets, you want to add the schedules first, and then you can move into that depreciation. After that, add your states, any secondary forms that you need, and you're ready to verify, print, and submit that return to the IRS.